Guys, my name's Joel Romaner and I'm here in this session to help you with business tax. Business tax, a level 4 paper that is a wonderful paper and will cover the elements of sole traders, partnerships and incorporated companies. In this session today, I'm going to look at the practice assessment number 2, task number 2, partnerships. You should be aware, guys, that you, during the course of your assessment, will be able to access the business tax reference material. This information, whilst you may remember it, should be used to your advantage. Within this document, of which there is 31 pages, as I've got my copy here, there is easy access for you to find all of the information that you need that's going to assist you in answering your question. For instance, if you scroll through this document, you will find directions straight through to partnerships, which we're covering today in this session on page 10. And if I take you to page 10, during the course of your assessment, you will have access to this document, which tells you some of the wonderful things you need to know. Let's make that marginally bigger, for partnerships. And let's just reassess them. Each partner is taxed as if they were a sole trader. Now, a sole trader is an individual who works alone on their share of the partnership profits. The partnership profits will be the profits generated by the partnership across the accounting period. Now, of course, we are working to the Finance Act 2016, so we will be looking at the rules and regulations that rely to that tax year. And it tells us, it gives us guidance here. It says that the first step is to share the accounting profits between partners and allocate any salaries and interest on capital for the period to each partner. Then you divide the remaining profit for each set of accounts between the partners based upon the profit sharing arrangement. Now, the profit sharing arrangement is at the discretion of those partners and will be at a level that they deem appropriate and fair. Of course, if they cannot resolve what they deem true and fair, then the partnership will probably dissolve. But as they are working together, I would assume they are unified and they would come to some reasonable share of the profits. So you may need to split. Now, this is where a really important technique comes into you, that you must apply during your assessment, because you may need to split the period if there is a change, such as a partner joining or leaving, or such as a change in the share of partnership profits. Opening year and cessation rules apply, well, as you've seen in an earlier task, individually when they join or leave the partnership. And we allocate the profit to each partner to the correct tax year using the basis period rules. Basis periods for continuing partners are unaffected by joiners or by leavers. Each partner enters their share of profits for a tax year in the partnership pages of their own tax return. Wonderful. The guidance is there for you. Now, here we have a session number 2, task 2. This task is centred around a change, not in the partners, but a change in the way in which the profits are shared across the accounting year. So it's up to you to ensure that you prorata the profits primarily to the periods before and then the period after the change. And from there, you will allocate, as you have been told, putting the numbers into the box accordingly. Now, let's just talk you through this question. Chris and Pat are in a partnership trading as estate agents. Great choice for their career. So Chris and Pat, two people in our partnership, and they have an accounting year-end date of the 31st of March. The 31st of March is significant. You're then told that they share profits at the ratio of 3-to-1, which 3-to-1 means 3/4 goes to Chris and 1/4 will go to Pat. On the 1st of August 2016, they started to take a salary. Now, salaries introduced into partnerships essentially to reward the partner that perhaps is doing more work. And as we can see, the salaries here, which crucially are given on a per annum basis, indicate that Chris is perhaps doing twice the amount of work as Pat, as indicated by Chris getting 9,000 and Pat getting 4,500. Now I must stress that is a per year, and because we are looking at a change in the year, we're going to have to prorata that salary accordingly. They also shared profits 65-35%. So the question has switched from being a ratio to a percentage, which is absolutely fine. From the 1st of August 2016, they also started to receive interest on capital introduced to the business. This is designed to ensure that the partner who provides the most money is rewarded as a consequence. The capital that has been introduced by Chris happens to be 15,000 and Pat 6,000. The interest that Chris receives is larger than the interest Pat receives. Remember, that doesn't indicate, but that must be on a per annum basis. Their salaries and contributed capital has been shown, and the taxable profit for the year ending the 31st of March 2017 was 71,460. Now, what we're aiming to achieve is we're aiming to get that 71,460 split between Chris and Pat according to the salaries, interest and profit share arrangements. But of course, that wasn't consistent throughout the whole 12-month period. Up until the 1st of August 2016, there was a simple arrangement of 3-to-1, and then after that date, there was a more complex arrangement. So we're going to have to take great care, and we can see we've got to the 31st of July, share of profits for Chris and for Pat, and then from the 1st of August, which must mean, and let's just absolutely be clear here, from the 1st of August, and I need a different colour, let's go red, to the 31st of March 2017, and this one would have been from the 1st of April 2016 up until the 31st of July. And we've got the interest, the salary and the share of profits. So 8 marks, 8 wonderful marks, which normally, according to the examiner, is well answered and well prepared. You guys, you need to make sure you take time. Don't rush through this, because it is a lovely task, but mistakes are easily made if you jump one step ahead. So we're going to look at answering this question in a calm and composed manner. Now, the first thing I strongly advocate is that you draw up a timeline. And so we know that the year commenced because, of course, if we have a year-end date of the 31st of March, the year must have commenced the day after, the 1st of April, April Fool's Day. The 1st of April 2016 is when the year commenced, and the year ended on the 31st of March 2017. Simple. Now, across that period, there were 12 months And the profit generated, as we know, was 71,460, which we were told in the question. Now, let's do this in blue, and forgive my inability to do a straight line. We've got a break. And the break occurred around about here. This is not to scale. The change occurred on the 1st of August 2016. Well, how many months? We've got all of April, all of May, all of June, and all of July. That's 4 months. And to be sure, because we know there's 12 months in a year, yes, you could say 8, and we know it's going to be 8, but we then have August, September, October, November, December, January, February, March. 8 months. So what I'm going to do now is I'm going to prorata that profit. That's 71,460. I need to know how much applies to the 4 months. So 71,460 multiplied by 4/12 will give me a number that I cannot do in my head. 71,460 times 4 shared by 12. That gives me 23,820. And for good measure, 71,460 times 8/12, well, that would give me 47,640, which is exactly double that amount. And if you want to verify this before you proceed, to make sure you haven't made any errors, just add the 23,820 to the 47,640, and you will indeed come back to 71,460. So I'm content those numbers are robust. Okay, so now that I'm comfortable, I'm going to go away and focus on the first period. So in the 4 months to the 31st of July 2016, my first partner, who is called Chris, I believe. Do we have a Chris? We have a Chris. Well, Chris gets 3 to 1, ratio of 3 to 1. So Chris would get 23,820 multiplied by 3 over 3 plus 1. Whilst his partner Pat, poor old Pat, he's only getting 23,820 times 1 over 3 plus 1. Chris, therefore, will get 17,865. 17,865, whereas Pat would get 5,955. Two numbers, quickly created. Let's go back to our answer and let's put those numbers in. Now, share of profits, we've just said Chris gets 17,865 and Pat will get 5,955. Comfortable? Any questions? Fantastic. Let's go back. Let's go back to my workings document. And that, by the way, guys, does give 23,820. Now, I'm going to change colour and I'm going to draw a line under this because I'm now looking at the 8 months to the 31st of March 2016. Now, the order which we're given here is interest on capital first, followed by salary, followed by profits. And that's exactly what we need to do. And for your awareness, the remaining profits to be shared will be after we deduct the interest on capital and the salaries. So in this intervening period, we're going to focus, first of all, recognizing that we have a total of 47,640 to share. What we're going to do first is the interest. Now the interest on capital has to be prorated. Interest on capital invested needs to be prorated. And subsequently, Chris, the dominant partner, so it appears, Chris invested in this particular situation 15,000 and he's going to receive 3%, which would give us £450, but that is prorated to recognise that the investment took place on the 1st of August, and so only 8 months worth of interest will be received. That subsequently comes in at 300. Pat, well, what happens here with Pat is Pat invested 6,000 and poor old Pat only gets 2%, which would be £120. And again, we prorata, so Pat has got 80. So the total of the interest is 380. I'm going to need that figure shortly, but I'm going to go and score a mark and put those numbers in the box. 380. Chris gets 300, Pat gets 80. All right, let's go back and now let's look at the salary. So, the salary paid, Chris gets 9,000. But that 9,000 is per annum, so we prorata and we declare 6,000 to Chris. Pat, poor old Pat, he gets 4,500, only half the amount. Again, times 8/12, and that should give us 3,000, giving us a total of 9,000. So let's get another mark in the box. 6 and 3. 6,000 salary to Chris, 3,000 to Pat. Now I'm just going to put the box here, 380 and 9,000. So what I want you to recognise is that 9,380 of our funds have been allocated. So the remaining salary at this stage is calculated, and the remaining salary, well, we had 47,640 and we've got interest of 380 deducted, and we've also got now 9,000 of salary deducted, which means that the remainder to be allocated is 47,640 minus 380 minus 9,000. We're looking at 38,260, and of that Chris will receive, do we told 65%, and poor old Pat, well, he gets 35%. So 65 would give us 24,869, and going across to our man Pat, he's going to get 35%, which would give us 13,391. 24,869 goes into this box. You can see one mark per box. 24 869. We weren't asked for a total, but we are going to need a total in a moment, which I'll come back and explain. So there we have it, a wonderful, lovely requirement. Just calmly working your way through this, if you would. Now there is a part B here, and we're talking about poor old Pat. Poor old Pat. You're asked to calculate Pat's national insurance contributions for the financial year based upon the figures that we calculated above for his salary share. Your answer should be to the nearest penny. Nearest penny. So 2 decimal places. If your answer is 0, enter 0. Now, for those of you at this stage that are unclear, we've got class 2, class 4, and class 4 at 2%. What does that mean? I hear you cry. Well, no need to worry, because if we come back into our sheet, we have down here the taxation tables, and it tells us class 4 contributions. It tells us the national insurance rates. Class 2 contributions, of which there is a small earnings exemption. Well, Pat has exceeded that, so it will be 280 per week for the entire year. Then, the class 4 contributions, the main rate is 9%, the additional rate is 2%. Well, the additional is paid, I must stress, on earnings over that 43,000. The lower earnings limit is 8,060. Your first 8,060 is exempt. So it's at 0. And then up to 43,000, you're charged 9%. So we are given guidance. We are given the information that we now need. What the challenge we have is what was the total? Well, let's do the class 2s first of all, shall we? So for part B, poor old Pat. Pat exceeded that limit, so Pat class 2s will equal 52 weeks times 280. 52 times 2.8. I'm declaring 145 pounds 600. I'm going absolutely over the top. 145 pounds and 60p. So 145 and 60. Lovely. Let's put that in here. Get this out of the way. 145.60. £145.60. Now I need to know my total earnings for Pat. Poor old Pat. Let's have a look. What did poor old Pat earn? Poor old Pat, his income from this partnership he had for the period to the 31st of July 2016, he had a profit share of 5,955. For the period to the 31st of March 2017, well, he earned interest, did he not, on his capital of 80. He had a salary of 3,000 and he had profit share of 13,391. So his 5,955 plus 80 plus 3,000 plus 13,391 gives us 22,426. Guys, there is 0 to be paid at 2% because he hasn't exceeded the upper threshold. So just get a 0 down here. If it was over 43,000, then we would have some figures in there. Now, the first 8,000 and, is it 60? 8,060 is exempt. And that means the relevant figure will be the difference. 14,366, which at 9% gives us 1,292.94. 1,292.94. And there we have it. And assuming everything else is good, guys, you've got 100% of the marks. Well, that draws that exercise to a conclusion there. We were looking at partnership profits. We were looking at the way in which we would allocate and split profits in a period where there was a change in policy. We had to take the entire year, split it into its relevant parts, and appropriate the profits according to the interest, salary, etc. All of the information we needed for the national insurance contributions was detailed within the reference material, so that was therefore a calculation. Guys, I've been Joel Romaner. This has been LSBF TV for Business Tax. You've been fantastic. Good luck with your studies.